Joining us from CommSec for a look at the markets, Tom Piotrowski. Hello, Tom. So how are we looking today?
Pete, we're going to kick off with a loss of around 0.2%, reflecting a similar theme as far as stocks are concerned in the Northern Hemisphere. So generally what we saw overnight were measures of activity that were moderating. We saw a bump higher for long and short-term interest rates, both in Europe and the United States, and that created headwinds for stocks. And probably something that has gone underreported lately is the continued march higher as far as oil prices have been concerned. So this has resulted in energy prices now where US and European oil benchmarks are concerned. They're around their highest level since the end of last year. It stems from the fact that OPEC and allied producers are extending production cuts into the end of the year, and that is in some respects putting a bit of a floor under expectations for headline inflation. So that is why you've seen the interest rate picture just nudge higher, and that's created headwinds for stocks. So last night on Wall Street, we had the Dow down by 0.5%, S&P 500 down 0.4%. The Nasdaq was down by around 0.1%. We had long-term interest rates up by about 8 basis points for a 10-year government bond. That's a reasonable move higher, up to around 4.25%. And that's probably the point to make, is now you've got oil prices at the upper end of a recent range. You've got interest rates at an upper end of the recent range. And that's just antagonising the stock picture. In Europe, we had weaker stocks as well, moderating rates of growth in terms of the latest figures on activity in the services and manufacturing in sectors weren't helping at all. Where European stocks were concerned, the German DAX was down by 1/3%. Today, a big day, Pete. We've got national accounts figures for the second quarter. In civilian terms, that means we're looking at how the economy performed over the course of the last 3 months. It's a big deal, but probably not as important in terms of the behaviour of the market compared to tomorrow's jobs figures. But nonetheless, the number to look out for is we're expecting an annualised pace of growth on average of around 1.8% compared to market expectations. So anything lower than that is going to create a bit of a headache one way or the other for the markets.
I like civilian terms. Tom Piotrowski. Often I need things explained to me like, well, even easier than that, like I'm a 6-year-old, just so I can get my head across things.
It never hurts, Pete, to just understand the nuts and bolts.
Yeah, gotcha.